Hey guys, Jared Wesley here of Live Traders, and it is that time of the week. It's lecture time. Guys, this week's topic is about volume. You're like, what? That sounds boring. Well, the two most important things in trading are price and volume. Okay, you have to have both of these things to be a great trader. So this week we're going to talk about how to decipher volume, what volume means in the context of the chart. Now some of you might think, well, that sounds kind of boring. Listen to me. This is one of the most important topics in trading. You see, you can have a green bar, you can have a red bar, but without volume, that bar is useless. And there's lots of different types of volume, right? You have pro-igniting volume, novice ending volume, you have continuation volume, all kinds of volume, okay? But volume by itself means nothing, and price by itself means nothing. So today we're going to talk about putting those two things together, volume and price. And a lot of times when you see a volume spike, depending on where it's happening, how it's forming, it will make a determination for you or confirm that you should get into the position, or you should get out of the position, or you should stay out of the position. Maybe a stock you were thinking about trading and now you see this happen, stay away. So I get questions a lot about volume. Well, how did you know that that stock was going to do that? Volume is the answer most of the time, or a lot of the time, okay? So today's lecture is a high-level lecture, and it's going to be talking about how you can figure out and use volume to be a better trader, a more accurate trader, because we're always looking for extra confirmation to be more accurate with our trading. All right, so if you guys like these videos, please, man, do a brother a favor. Click that like button. Smash, man. Hammer that subscribe button. It's the best channel out there on trading, and you know it. All right, so I'm Jared Wesley of Live Traders. Let's get to it. This week's lecture topic is how to decipher trading volume. On the surface, that sounds like a pretty boring title, right? It's like trading volume. Like, please, Jared, I know what volume is. Well, do you? A lot of people ask me, why did you take that trade? Or how did you know not to take that trade? And I'll say volume. And then they don't understand what we mean, okay? So we're going to talk about different types of volume. A lot of people know the basics. The basics are, oh, well, that's igniting volume. Oh, that's ending volume. Great. Well, that's continuation. Those are the basics. But you need to learn it on a higher level than just the basics so you can apply it properly in real time, because in trading, there are really only two things that matter. Price, which are the candlesticks, and volume, right? One tells us what is happening. The other tells us how it's happening. Let me repeat that. One tells us what is happening. The other one tells us how it's happening. Okay? And if you don't know both, you shouldn't be taking that trade. But a lot of people overlook the volume, and in doing so, they're missing out on key components of the trade, because we're looking for volume to confirm what we're doing. All right? And that's the whole idea of trading. Extra confirmation all the time. The more confirmation you have, the more accurate you'll be as a trader. Okay? See, volume spike increases the odds, but always be prepared to accept a reversal. Yeah, we'll get to that, Isaac. We haven't even started yet. So we're going to talk deeply about volume today, and I am telling you, not suggesting to you, I'm telling you, it's one of the most important parts of trading, and perhaps one of the most overlooked parts. Everybody looks at the red and green candlesticks and nothing else. Okay? So prepare to get your learn on today. All right? Let's dig in. So, volume is money. Okay? You're like, oh, that's great, Jared. You know, you must have volume to be able to trade. All right? Especially for intraday traders. Okay? Don't rely on average daily volume, as it can be misleading, especially with gaps. Now, I want to be clear here. This very first slide is just a very basic understanding of volume before I dig in deep. All right? This is just basic for the people that might be brand new and have never heard of volume. Okay? So, if you take a look, sometimes you can have a stock that does 1 million shares a day, and today it does 400,000. Sometimes you can have a stock that averages 400,000 shares a day, and today it's doing 4 million shares. Okay? So when you look at average daily volume, that's not the whole story. It's part of the story because that's average. But do we really want to trade average? Not really. We want to trade the exceptional stocks, the above average stocks, the unique stocks, the stocks that are doing something different. Okay, now, there are exceptions to that. Like Unwall, for example, he trades Meta and Tesla and Microsoft a lot. Okay, well, their average daily volume is so high you don't have to worry as much about it. But there are days they do exceptional volume. Those are the days we're most interested. Merck is a great example of that today. Gapped over a huge red bar and it's doing big time volume. Okay, so when you think of it like that, volume can be misleading, especially with gapping stocks. Volume equals commitment or lack thereof. Okay, but who is the commitment from? Is the commitment from the buyers or sellers, and is that good or bad? Volume tells you a lot about what is happening, right, or how it's happening, right? So we talked a minute ago about the candlesticks. What? Higher or lower or sideways? That's what? Higher, lower, sideways. But how? Is it going higher with volume or is it going higher without volume? Did it peekaboo over a breakout on huge volume and then go lower? If so, why? We're going to talk about it, okay? So volume are often a confirming indicator. Is volume R? Is volume is often, I think is probably the appropriate vernacular there. All right, volume is often a confirming indicator, but it doesn't take the place of a good technical pattern. Does that make sense? So even if I'm looking at volume, I still need something. Even though volume can be one of the most important things out there, and some traders just trade off of volume. They literally just trade volume. I still need a pattern. So for me, volume is nice, but price is still number one. But volume is like 1A and 1B, okay? Candlesticks represent the supply and demand relationship. However, volume tells us the level or magnitude of interest. I want all of you right now, okay? 2-minute warning for PTS bidding. Thank you, Serge. Get your bids in or forever hold your peace. Guys, I want you to take a screenshot or a picture of this last bullet point. Candlesticks represent the supply and demand relationship. However, volume tells us the level or magnitude of interest. So for example, Kaz just said a second ago, volume is how you can find institutional action. Mom and pops don't buy hundreds of thousands of shares, millions of shares. So when you see like a 300K spike on Tesla, that's not your next door neighbor unless you live next to Bill Gates or Warren Buffett, okay? The magnitude of interest is equally important as the supply and demand relationship, okay? It's not the who and the what, it's putting it together because we're looking for confirmation. So while some of this appears very simple, it's a hugely important factor in whether or not a trade's going to work, all right? And which is why we can be so accurate most of the time when I say, oh, that's a shakeout, it's going to stop out. I'm pretty accurate most of the time when I say, oh, that's not going to work, you can fork that trade. Why? Because I understand the supply and demand relationship in relationship to volume, okay? So what can we expect before and after entry? That's the key here. You want to know what the volume is before you get in, and you also want to know what the volume is right after you get in. And how that reacts after you get in could have a very important impact on whether or not you decide to stay in the stock. So volume equals money, and money represents commitment or lack thereof. So if you don't have a lot of volume in a chart, you don't have a lot of commitment by definition. And to be clear, guys, a stock can move up $1 higher on 100 shares. Yes, it can. People just think that to move higher, a stock has to have tons of volume. It doesn't. But I don't want to trade those stocks because they're easily manipulated and there's not a lot of commitment. The other fact is this. If you have a huge volume spike with little to no price movement, which we're about to see in the bottom here, that's a problem. Because that means the commitment is not on the buying side, but rather it's on the selling side, even though price popped up a little bit. It's a warning sign that you are about to get screwed. You're about to get hosed. You're about to get shaken out. Okay? And most of you don't even look at that stuff. Okay? So price tells us what is happening. Volume tells us how it's happening. Volume is secondary, but is still very, very important. Okay? So a volume increase without price movement is a warning sign. Price movement without a volume increase is also a warning sign. I want you to think about that for a second. Internalize it for a moment. A volume increase without price movement is a warning sign. Okay? And remember, nothing happens in a vacuum, so where it's happening matters. So when you see that volume increase without price movement, where it's happening is very, 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 very important. Example, okay, and we're going to see a lot of examples. What if you were 5 bars up on a stock? Green, 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 green. You're up, 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 up. And you see a monster volume spike without any more price movement higher. Basically what that's telling you is pullback is happening. It's going to happen soon. The buyers tried to push this stock up. The sellers overwhelmed the buyers. And you're going to see a pullback. That would be ending volume, right? If you see a volume increase with little price movement, like a breakout that pops up a nickel, 3 cents, 5 cents on monster volume, and then comes right back to break even and leaves a topping tail, almost always going to be a shakeout. Okay? If you see price movement without volume, 1, it's usually spready, and 2, you don't really want to be in that because the commitment is highly questionable. Because where are all the people? If this stock is so good and it's moving higher, where's all the other interest from people? It's not there. Okay? So you have to be very, very careful. So let's take a look at some charts. We're going to see mostly charts from here on out. Okay? Now, basic chart. Very, very basic. On the left side, okay, what is the left side? Spots and dots. That's what we call these. See all these little dots? This is actually trading. Remember when I said earlier, you can push a stock up on 100 shares? Let's go all the way down to the bottom for a minute. Do you see this right here? This represents how much volume is there. You see the little 0, and then you see the 2,500. So this red bar right next to my cursor right there, that's about 2,500 shares. 2,500 shares put in this wide range red bar. 2,500 shares put in that bar. No thank you. No thanks. Nope. I don't think so. Not for me. This stock's putting in a couple hundred shares for each bar. Look at the spots. Look at the dots. You could, and the reason, guys, and I know you're thinking, oh, that's a good thing. It's not. See, you want to have this concept in your head. You are not the whale. You're the little shrimp or those remoras that hang onto the belly of the shark, the belly of the whale. That's you. You are not Goldman Sachs. Okay, you are not a high-frequency trading firm. You're not going to swim in front of the shark. You're not going to swim in front of the whale. You want to ride on their coattails. Why am I commenting on this? Why am I saying this? Because if I got into this stock and let's say I needed 5,000 shares of it, guess what's going to happen? It's going to put in a big wide range green bar, and I'm going to have to pay up, pay up, pay up, pay up, pay up. And guess what? I'm not going to be able to get out of it. When this thing pulls back, there's not going to be anybody to buy up my shares. You can see it. It doesn't do enough volume. Plain and simple. Now, for experienced traders, you know this. This is basic stuff. But for new traders, you're sitting here and you're like, what do you mean? A stock can go from 26.60 to 27 on like 100 shares? Yes, it can. Yes, it can. And in this case, we've seen it happen on maybe 4,000 or 5,000 shares. This thing literally goes from 26.60 all the way to 27.60 on what? Maybe 5,000 shares? Maybe? Right? How can there be big price movement with no volume? Simple. I buy 20 shares from you, Rob, and you buy 20 shares from Isaiah, and Isaiah buys 20 shares from Christopher, all at higher prices, higher prices, higher prices, higher prices, higher prices, higher prices. That's it. It's very simple. The stock doesn't need huge volume to go up, but what it does tell you is no one is interested in the stock. You and 5 of your friends are interested in the stock, and that's it. Well, that's a problem, because that means you can move the chart, and I don't want to be able to move the chart. Okay? Unless you're a monster institution, I don't want to be able to move the stock. Okay? Now, on the right-hand side, now look at the difference. Look at the bottom. 0 goes up to 100,000 shares. So every bar that comes across that threshold, That means the stock printed 100,000 shares in that time frame. In that 5-minute period, this stock printed 100,000 shares in 5 minutes. 100, 200, 300, 400, 500, 600, 700,000 shares. That's what I want. Guys, listen to me. I want to be clear here, and this is important. You don't want to be noticed when you're trading. You don't want to be noticed. Okay? You want to be the remora. Okay? You want to be the underbelly of the shark. Let the shark do all the work. Let the whales do all the work. You're just riding the train. You don't want to put yourself in front of the train. You get hurt. Okay? So volume, even though this is very basic, you must have it to trade. Just on the most basic level, you have to have it to trade. Okay? Now, volume shows commitment. Okay? Here's a basic example of a breakout. 200 period moving average, 20 period moving average, 50 period moving average. Okay? So, we have a stock that moves up, chops around, and then moves higher right here. Gets up to this price point, a little far away, consolidates back for 2, 4, 6 bars. Okay? This is a little bit of resting volume. The stock is taking a break. Why would it need a break? The stock needs a break because it just moved up 3 bars in a row. It's a little bit tired. It's like, hey, you just ran a marathon. Give me a break before I continue along my journey. Okay? So, consolidates back towards the rising moving average. And when it breaks, volume comes in, but it's not just volume. It's volume combined with price movement. It's volume combined with price movement. This is exactly what you want to see. All right? Volume combined with price movement. I don't know why that's there. Let's get rid of that. Okay? If this thing peekabooed 3 cents above on huge volume, I'd be deeply concerned. But the fact that it followed through with volume shows buyers are overwhelming the sellers. Buyers are in complete and total control. They own this stock. They are committed. That's what you want to see. This is what you want to see in a perfect world. Continue. So now, we're going to get detailed. Okay? Get your thinking caps on. All right? Now, guys, I want to be clear. These are the kind of lectures we do all the time. All the time. All right? There's no, like, sit back. You know how you are in the classroom. Kid with their head down. So, oh, teacher, please don't call on me. Please don't call on me. No, that's not how we play around here. Okay? I will be asking for our audience participation at some points, even though I gave you most of the answers. Okay? So, let's start with number 1. All the way on the left-hand side, there's an orange box around all this stuff. Now, what this orange box represents is an increase in volume, right? Volume here, a little higher here, a little higher here, a little higher here, a little higher here. So volume is increasing. But what is also increasing? Price. Price. Anytime there's a topping tail, it gets bought up. Wide range bar, topping tail, bought up. Okay? So this stock, while sloppy, to be fair, it is somewhat sloppy. But the volume is increasing as the price is moving higher. So that means every time sellers creep in, buyers overcome them. They overwhelm the sellers. Okay? This is what commitment looks like. Increased volume with higher prices is bullish. Okay? Because any time a seller tries to, make an impact, the buyers overwhelm them. Gets up, now you have to start getting concerned. This is a foreshadow right here, this red bar. This red bar is foreshadowing what's going to happen soon. Because we're getting far away from the moving average. Volume has increased to a crescendo. Okay, can't last forever. There's a finite number of buyers out there, right? They're not infinite. Not like our government. We have an infinite amount of money. Ha, 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 ha. They actually said that. But anyway, stock moves up. What happens? We get another big green bar spike far from the moving average, and then topping tail, topping tail, topping tail, topping tail. Read the chart. This is resting volume right here. Far from the moving average. Extended move. Okay? So now, we pull back, we move up. Now, we get this red bar on a big volume spike. This is number 2. Volume spike, red bar. Okay? Volume spike without rising prices is bearish. But if we go to number 3, in conjunction, combining it with number 2, what's really happening here? You're getting a big volume spike with little to no bullish price movement at prior resistance. So number 3 is a double top plus a moving average expansion. We talked about, why did I put this in here? Because last week's lecture talked about moving average expansions. Note the 50-period moving average and the 200. Look at the distance. Look at the acceleration of the 50 and the 200. This stock is moving far away. What does it tell me? It tells me the stock is getting really extended. Right? The stock is getting really extended if it's moving this far away from the 200. Plus, I'm getting a volume spike with little to no price movement at an area where the stock previously pulled back. Now, I know that's a lot of information, but this is what great traders do. They process the information like that, like that, like that. Right? They process the information quickly because you have to. It becomes unconsciously competent. So now we have multiple concepts converging. I have an extended stock. I have a topping tail. I have a stock that's far from the 50-period moving average. I have a stock that has a volume spike. I have a volume spike on a red bar at a prior pivot. My goodness, what's that, 7 things? Well, what's our job? To have multiple concepts converge to let past price action help us predict future price movement. Right? That's our entire job as traders. So all of these things, all of these factors, all 6 or 7 of them point to lower future prices. Lower future prices. That doesn't mean that I'm going to immediately jump in this right now. Why? I want a little bit more confirmation. And what's the confirmation I want? A break of that pivot right there. So let me take this. See that right there? Okay. It's green. So for me, I'm looking at this and I'm thinking, okay. Would it be aggressive to short up here? It would. Could I start thinking about it right here? Yes. Maybe a partial lot here and then get full at the green line. Right there. Okay? What happens? Number 4. 1, 2, 3, 4 bars down plus a bottoming tail next to it, plus a change of color bar next to it, plus a volume spike, expect a bounce. So I have 1, 2, 3, 4 bars. Well, 3 of those 4 bars are wide range bars, some of the widest bars on the chart. And I'm getting a big time volume spike. What's the problem? Well, the problem is I'm multiple bars down. I'm near some prior congestion right here, right there to the left. Okay. There was a tug of war here before, if you recall. So there's going to be a little tug of war here again. So while the overall picture is now bearish, expect a shallow short-term bounce. So in this case, if you were a trader who's very patient, you might look to add on this bounce. Right? You're expecting at number 4 here, I'm expecting a bounce. So on this bounce, if this chart doesn't do a great job, but if I get a really nice sell setup, hold on, let's draw this line right there. Okay, guys, let's do this. Hold on. Oh, isn't that beautiful? What happens? What happens? The floor, the green, the floor becomes the ceiling. Right out of professional trading trades. The floor here, what was holding the stock up, is now been penetrated. It's been broken. It's fallen through this area. So the floor is gone. And now the floor becomes a ceiling. So at this level, at this point, at this minor price resistance, at the declining moving average, a good trader is already short. They're already short the stock. Now they're looking for an add point. Let me find an area to short the stock. Why? Because I can also lower my stop loss here. And then the stock drops and drops and drops. And then what happens? 1, 2, 3 bars down. Huge volume spike. But look at the bar. The bar is no longer some wide range red bar. It's a doji bar. Doji bars represent a tug of war between buyers and sellers. The buyers and sellers are fighting right now. Higher, lower, higher, lower, higher, lower. Well, you have to lean slightly on the buyer side because we've been so weak on the way down. This is the first time in these 3 or 4 bars that buyers have been able to make a significant impression. And that impression means a doji bar. We still have topping tails, but now we have bottoming tails too. Something is changing. Expect a bounce. So volume spike at the 200 MA, plus 4 bars down, plus a narrow body bar, plus prior support. Expect a bounce. Now, we don't know how high it's going to bounce. I just know I'm expecting a bounce. So note, each volume spike combined with other concepts converging in the same area helps predict the next likely price movement. So pay attention. We're not trading in vacuums. We're not using 1 or 2 things. Okay, we're using 6, 7, 8, 9 things to help us predict the future. Okay? Pay attention to volume, but pay attention in context. In context. Okay? Let's keep going. We've got a lot more slides to go. Watch the power of volume. Okay. Number 1, here's the box, the orange box. We have a stock that's downtrending. I know it's downtrending because I can see the blue 50 MA declining. We're down 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 bars in a row. 11 bars in a row. Okay? And then big volume comes in towards the bottom. Note, it's very important to take note. The beginning of this move, see it right there? 2, 4, 6 bars right there? The volume wasn't that significant. It really wasn't. But it wasn't until this bottoming tail and then these wide bars that volume started jumping in. Okay? It wasn't until these bars that volume started jumping in. So it's the acceleration of these bars, the size of the bars, the increase in volume, plus the distance from the moving average, and the sheer number of bars down, that should have you thinking, the bottom is near. The short-term bottom is close. Increased volume, but the move is getting extended. Wait and see. / bullish. That's the thought process. I'm going to wait and see. But I think the bottom is close, which means I should be thinking perhaps long. Okay? Then what happens? Doji bar, green bar comes in on big volume. And this green bar takes out 2.5, 2 3/4 of the red bars. Okay? Huge green bar. Huge volume. Buying commitment is coming in. And then it gets interesting. See the blue box? Volume spike after multiple wide range bars, plus far from the 20 MA, 50 MA I believe, okay? Plus a doji narrow body bar, plus wide range green bars is bullish. But then what happens? What happens? You get the tug of war. You're still below the declining moving average. You're still on the trend line. The orange line is the trend line, okay? And you put in doji bar. So what? What's the thought process there? Possible thought process. Talk to me. Talk to me for a minute. Audience participation. What is your thinking now? Right here at this doji bar. At the trend line. Below the declining moving average. What's the thought process there? Talk to me. Talk to me. Yeah. I like Eric's answer. Possible retest of the low. Possible pullback. Okay? And guess what? A retest of the low would not be unusual. It's a weak stock. It's below the trend line. It's below the declining moving average. Okay? But, and here's the key, but we have to be concerned that it did put 11 bars down. It's a borderline climactic type of a move. That's concerning. My point that I'm making here, is this. We don't know the future. We try to predict the future with confirming ideas. So here's my point. You are looking, and there are only two things you're looking for here. You're looking for one of two things. Do you know what those two things are? You're looking for one of two things to happen here. And the only two things I can think of that I would want to see happen here. Talk to me. Only one of two things, or really two. There's two things. One of them is, either one is fine. And this is where you guys are like, well, I don't know. This is why I asked the question. I want you to think about it. If I'm starting to believe that this stock is bullish, right? Note number 2, volume spike after multiple bars down, far from the MA, doji, narrow body bar, wide is starting. But if I'm starting to think the move is over, there's only two things I want to see happen. I either want to see a retest of the low with a volume spike and a bottoming tail, a retest of the low with a volume spike and a bottoming tail, or a failed sell setup. They're the only two things that I want to see. Either a retest of the low with a volume spike or a failure of the sell setup. That's it. And like I said earlier about NVIDIA, if it doesn't give me one of those two things, I walk away. That's what good trading is. You don't tilt your head sideways and go, well, maybe, kind of, sort of. It's like I said before, you go to the auction and you're like, I will not pay more than $100,000 for this car. The car's at 120, you walk out of the room. You don't sit and stay there and go, oh, well, maybe. No. You're the clearest before you're in the trade. Your mind is the clearest before it's in the trade. Okay? You know what I'm talking about. So in this case, we get a doji bar on volume. Then a red bar on volume, but it has a bottoming tail. That's not good. This stock's supposed to be going lower, and even though the bar is red, it's a bottoming tail on volume. That means the buyers largely won this battle. Not completely, but mostly. Then the wide range green bar comes in. The sell setup fails. Now it goes higher. Now gold is going to happen because now I'm just going to wait for the pullback. And in this case, I get red bars. You can see the fighting right here. This is good. Buyers are holding this thing up, continues a little lower, but now what happens? Resting volume as the stock pulls back towards minor support and the moving average. See the resting volume right here? The decrease in volume. That's what I want to see. The stock has worked very, very hard, to be sure, to be clear. The stock has worked very hard to move from this little doji bar right here all the way up to here. Okay? It's worked very hard to do that. Now it needs a break. And during that break, it pulls back a little. Okay? So when you look at this, it pulls back to the moving average, to minor price support, and it gives you a couple green bars. So you're going to buy above this little tiny green bar or above the topping tail. You're going to buy above this tiny green bar or above the topping tail. And then it rips. Your first target is going to be right there, and it keeps on going. So number 4, what happens? Volume begins to increase at support after a multi-red bar move lower into support. So note, as the stock moves up, buyers continue to come in. So you want the volume drop on the pullback, and you want the commitment on the bounce. Bam! That's it. That's how it's done. This chart has a little bit of everything. Is it the cleanest chart you've ever? No, but it's telling you with price and volume what's likely going to happen next. But we're not just using price and volume. We're using a moving average. We're using a trend line. We're using support and resistance. We're using all of those things, multiple concepts converging. Okay? And then 5 over here, what happens? Volume spike at the 200 MA, okay? Plus 4 bars down, plus a narrow body into support, you're going to get a bounce. Okay? So when you look at these things, this is how you read a chart. Okay, guys, I gotta move on here. I didn't realize how many more slides I have. I put too many slides in here. I do this frequently. All right, next slide. All right, so we have a stock on the left-hand side. Stock moves up, pulls back 3 bars. 1, 2, 3. Those 3 red bars are wide range bars. Okay, and then the next bar right here is a topping tail bar. This is deeply concerning. Because what this bar was, guys, tell me, what color was this topping tail bar at one point in time? The whole bar, all of it, every piece of it. What color was it? Right there. This topping tail bar right here. Someone says green, someone says red. Well, one of you is right. One of you is right. It's green. This bar at one point in time was basically a green turnaround bar, right? Right here. This was a green turnaround bar right there, okay? It was green, 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 almost engulfing the red bar. So the fact that this bar used to be green and now it's closing near the low, what does that tell you? It used to be a wide-ranged green bar and now it's closing near the low. What does that tell you? What's it tell you? Come on, talk to me. It's the easy answer. Come on, guys, it's not a hard question. Come on. The bar used to be wide range green and it left a massive topping tail. This is like page 20 in PTS. This is like the beginning of the book. Don't do that to me. Come on. If this stock was full green and it left the world's biggest topping tail, are buyers stepping up or sellers stepping up? Come on, common sense. My 7-year-old can answer this question. It used to be all green and now there's a massive topping tail. Selling pressure, right? The buyers were unable to hold their position. Right? The buyers were unable to hold their position. Okay? Sellers crept up. All right? Sellers crept in here. Okay? Now I want you to think about this because clearly you guys need some help. So let's do something here, okay? Because you guys, this is very disappointing. Okay? Hold on. Let's make that red. I want you guys to think about something right here. For all yous that said bullish, this is what it used to look like. This is the first bar. This is the second bar. It used to look like this. It used to. And now it looks like this. You mean to tell me that there's a lot of buyers there, even though it used to look like this? And now it looks like this. What happened right in here? Let me show you. I want you to think of it like this. That's the way you need to think of that bar. That is the way you need to think about that bar. Okay? Does that make clear sense? I find people are largely visual. And when they see a visual representation, things become clearer to them. Okay? This is how you need to think of that topping tail, as red, 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 green. The question you need to then ask yourself is, why were the buyers unable to hold their ground? Because the sellers were more potent and more powerful. But there's more. For only $5.99, there's more. Okay? Let's move this over here for a minute because I may need it again. The next bar does the exact opposite. And not just the exact opposite, but it does it on bigger volume. On bigger volume. So now we have this. Okay, now hold on, because a lot of you are mentally not understanding how this works. Okay? You're looking at this. Okay? See this bar right here? You see this bottoming tail under number one? Under number one. See it right there, the bottoming tail bar. Okay? See it? That's the body of the bar. That's the body. At one point in time, okay, at one point in time, it looked like this. Okay? It looked like this. That bottoming tail was actually a red bar, like that. Literally, this bottoming tail over here was a full red bar. Was a full red bar at one point in time. And then what happened? This started to happen. Inside the bar, buyers, 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 buyers. Okay, and what does that ultimately look like? It looks like this. Hold on, I'm not done, because you guys need visual representations of everything. Okay, what it looks like is this. Hold on, I apologize if it's not perfect, but you get the point. This is what the bar looks like. This is what it looks like inside the bar. Okay, this is what you see on the chart. Right here, the bottoming tail is what you see on the chart. But this is actually what happened. Right? The buyers completely overwhelmed the sellers. They took them out. And we know this because of the volume spike. Do you see that insane, ridiculous, absurd, obscene volume spike? See it? That means the buyers completely took out the sellers. The sellers were unable to hold their ground. This is very, very, very bullish. Okay? And what happens? This ignites a new move higher. Okay? So look at the whole picture. Wide range ending bar near prior support plus a bottoming tail plus a change of color bar plus massive volume equals bullish. And it happened near prior support. Okay? This is how you have to think about trading. Okay? You have to look inside. There's more to it than just looking, oh, it's red, oh, it's green, oh, it's red, oh, it's green. No, how it happens. You guys, for those of you who have taken professional trading trades, it's not just where it is, but how did it get there? How did it get to where it is? And was there anything else going on? In this case, lots of volume. Okay? So these things are very, very, very important. So stock moves up, pulls back, bounces, and then you get a gap down. Note, it's holding the trend line. It's holding the trend line. Okay? Committed volume. Broke support with a bearish wide range bar, plus it's below the moving average and below the trend line. So below the moving average, below the trend line, and it took out support. Guys, stock's going lower. See this volume spike? See it? The stock tried to hold support, and it couldn't. It went below it on monster volume. So any bounce is likely shortable. Any bounce here is likely, as long as it's under the moving average and the trend line. You can basically short all the bounces. Bounces, short it. As long as it holds the trend line and holds the bearish moving average. Okay? Multiple concepts converging. Right? I need you guys to think of things like this. And to be clear, Professional Trading Strategies explains this in incredible detail. I'm going over this slide in 5 minutes. That's 20 hours. 20 hours. So much information, you're going to have to watch it 4 or 5 times. Okay, let's continue, because I still have some more slides. All right? So, volume, volume, and more volume. We have a stock that is moving lower, declining moving average, and I want you to take a look at a couple things, okay? I really do. It's really, really, really important. What do we see here? Right here. We see a green bar, and below the green bar, we see the biggest volume spike on the chart. The volume spike is over 2 million shares for this one bar. This volume spike is over 2 million shares for this one bar. And it's very, very far away from the moving average. And it's green. What do you think the deal is here? What's your general opinion? Now, remember, and I tell this to you guys all the time, A good way to do things, guys, is this. For those of you that are new, a good way to do things is do this. Sorry, I'm going to have to do this like this. Hide the future. Hide the future. A good way to read a chart is to do this and just hide the future. Okay? Don't look at the future. Try to decipher this bar by bar. Bar by bar. So let's take it off now. Okay? So now, lots and lots of volume, but no follow through. The stock's in a downtrend. So when you're in a downtrend, the trend should continue. That's the way it works. The trend should continue unless or until, okay, something changes. Well, what could change? A possible bounce at support. A possible extension from a moving average. Too many bars down, or, wink, wink, a monster volume spike. Okay? Exactly. Exactly right, Jordan. That's exactly right. So they get the gap down they've been looking for, right? They probably, came out with some bearish, analyst, whatever. They get the gap down they want, and then they, boom, they cover into everybody. So I'm far from the moving average. I get a monster volume spike and it's a green bar. Stock goes a little bit lower, bounces. By this point in time, after a spike like that, you should be fairly certain that the low has been set. You should be fairly certain that the low has been set. Right? Stock had a huge monster volume. Then it bounces back up. The next time it comes in this area, it's almost definitely going to bounce. Now, am I saying buy it right here? No, I'm not. I'm simply helping you predict the next future movement. Why? So we can be prepared early on to take advantage of it. You know how you guys are always like, man, how do you guys get into those trades so fast? Or how do you? Because we're not always looking at them the second they trigger. We've been looking at them. So when they do something, it's like NVIDIA today when I said, guys, if it gives us this pullback, I'm going to put my order in now. The stock was at 464, and I said, well, if it gets to 462 or 461, I'm going to buy it. I'm looking at it long before that happens. So in this case, I am looking at this, okay? And I'm looking at it going, that low has probably been set. Still below the moving average. That's not good. It's still holding the trend line, right? If I drew a trend line here, right? Let's draw a trend line right there. Okay, let's make that orange. Okay, so it's still below the trend line. So it's not an action event for me. But guess what's happening? The multiple concepts are starting to come together, right? They're starting to form an idea. And the idea is starting to say, whoa, the low has been set. Now I simply need it to break the trend line and break above the moving average and preferably put in a higher high. Let me repeat that. Now that I know the stock is pretty much not going to go lower, I just want a little more confirmation. And that confirmation would be break the trend line, break the moving average, put in a higher high. Well, boom. Wide range green bar, on volume, buyers are committed. What did I get here? I got everything I wanted. We broke the trend line. We broke above the moving average, and I broke above resistance. So now, I'm just waiting for a pullback pattern, a breakout pattern, a 3-bar play pattern, and what do you get? A little bit of a wedge breakout. What happens during this consolidation, which is now above the moving average now? I get a huge volume drop. Huge volume drop. That's great. Taking a break. It's worked hard to get here. Take a break. Gets back towards the moving average. There's your buy signal. Look at the volume go, baby. Boom, 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 boom. Institutions are laughing their asses off. All these people, oh, it got downgraded. Cash, sorry. Oh, it got downgraded. It has to go so much lower, right? They're just laughing at you, right? They do these things on purpose, okay? I couldn't resist. I apologize. I shouldn't have said that. I couldn't resist, okay? Now, we talked about that the other day, Jordan. That's the concern here. How often do you buy in the moving average? Well, in this case, more frequently, because it's giving you everything you want. Now, if it was a different way that it got there, Jordan, you're right. We probably would have a hard time with the 200. But because of how it got there, you have to look at this as a transition, that it's going to get through this area. Okay? All right? Boom. All right, let's move on. Okay? All right, now, on the left, right here, chop, 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 doji bar, topping tail, bottoming tail. Okay, right there on the left. Why is this important? You'll see in a minute. You'll see in a minute. Stock moves up 1, 2, 3, 4, 5, 6, 7, 8 bars in a row. And then gets far from the moving average, pulls back 1, 2, 3, 4, 5, 6 bars. Now, that's number one. 6 bars down plus a narrow range bars at the bottom plus volume spikes, bullish. So we are what? 1, 2, 3, 4, 5, 6. Okay. Note, what do the narrow range bars represent? Let me hear it. 3-word answer or 2 or 3-word answer. What do these narrow range bars represent? Talk to me. What do they represent? 2 or 3-word answer. Good. Brent, the word I was looking for was slowing momentum or slowing of momentum, but selling momentum is slowing down. That's right. The word I'm looking for is slowing momentum. Selling pressure is easing, right? Sellers are clearly in control here. Look at the size of these bars. I mean, they're massive red bars. Massive red bars. And then these are not massive red bars. And they're on volume. What? Now, I want you to think about that. So wait a second. Let me get this straight. Guys, please pay attention for the next 1 minute. Please pay attention. Let me get this straight. So this stock moves down with huge bars on decent volume. But all of the sudden, 2 bars that are like the quarter of the size of this bar come in on massive volume and the price doesn't go lower. So wait, hold on. So the stock can go lower on small volume, but it can't bounce on it can't continue lower on massive volume? What does that tell you? If the stock was able to go lower on mediocre volume, but then massive volume comes in and it's unable to continue lower, by definition, what does it tell you? Buyers are stepping up. They are overcoming the selling pressure. Because with this level of volume, the stock should have gone lower. But now we have narrow range bars on massive volume. There's a change of momentum. There's a change of ownership happening. Sellers are getting replaced with buyers. And that's what you need to understand here. Because with that level of volume and this level of weakness, the stock should have continued lower. And it didn't. So by definition, these are buyers in here. Otherwise, the bar would be a lot bigger. You'd have a wide range ending bar on ending volume, but you don't get that. Buyers are stepping up. So then you get a green bar on volume, bounces. Now, why do we get a topping tail here? Number 3, small supply area absorbed by the wide range bar on volume. So what's happening? This is that supply area, that crappy area. It's getting absorbed. Right? We're penetrating deep into enemy territory, but it's a tough spot. Sellers are committed. So you get a topping tail, pulls back, but what happens? It does not put in a lower low. So this is a possible area where you could buy, right? Possible area you could buy, or you could wait for a bounce and buy the pullback. Unfortunately, this never gives you the pullback, okay? You could, guys, unmalls out meta break even. You could wait for the bounce Then look for a pullback. If you don't get the pullback, oh well. Or you could take a bit of an aggressive play there because you're looking at this move lower as the bottom, right? You're looking at this move lower as the bottom. Big volume spike, big volume spike. Then, as the stock moves back up, let's take a look at number 4, retesting a prior low with narrow range bars, plus a bottoming tail, plus a volume spike. Take a look at these 3. Okay, right there. Right here, you're getting big volume. It's right in this area, these 2, bottoming tail. Okay, right here on the blue one, bottoming tail. And then right here on the volume, bottoming tail. Every time the stock is being tested, it's passing the test. Support, supposed to bounce, it does bounce. Again, it's tested again, it passes the test, bottoming tail. It's tested again, it passes the test. They're buyers, buyers, buyers. That's how you have to look at this. And it's happening at a prior support area. It's doing everything you want it to do. It's going higher. So you should feel fairly good about nibbling. I don't know if I'd go crazy big here, but nibbling some and give it a little bit of room. Don't give it the green line. Give it just a little bit more wiggle room, and then boom, you get paid. Okay? Now 5. Big volume spike, red bar. You're up 1, 2, 3, 4, 5, 6, 7, 8 bars in a row. Careful here. Big volume spike after an 8-bar move up equals slowing momentum. Equals needs a pullback before going higher. Take a look. You're far from the moving average now. You're getting sellers are creeping in for the first time, and they're doing so on volume. Be careful here. The momentum is slowing down. Does it go a little higher? Yeah, it goes a little higher, and then that's it. It's over after that. That's it. It's over after that. Okay? So look at the whole picture. Where plus how a pullback is coming. Right. So what do we have? Stock in a downtrend. Okay? Stock in a downtrend. Goes lower. Bounces back up. But look at the divergence. Okay? Pay attention to the volume and the location. Moves back up, pulls back. Now, you guys are looking, well, should I buy this? No, I'm not telling you to buy this. Okay? It doesn't matter, Vince, is the answer to your question. I'm not being flippant. It doesn't matter. I don't care if this is a 1-minute chart or a monthly chart. It doesn't matter. It's irrelevant. Okay? It's irrelevant. All right? So, stock bounces, pulls back, and it's now above the moving average. But this is not what I'm focused on. For this slide, I want you to look at this. 1, 2, 3, 4, 5 bars. 1, 2, 3, 4, 5 bars. Okay? 5 bars up. Volume spikes far from the moving average. What's this? That's awesome, Damien. At least you got out, right? What's this? Prior pivot resistance after an extended move higher with a topping tail on volume. That's ending volume after a 5-bar move at resistance with the topping tail. Let's do it again, baby. Ending volume after a 5-bar move up with a topping tail at resistance and a moving average divergence. So that's 5 concepts converging in an area. Going to get a pullback. Will the pullback be buyable? Probably. It's probably going to be a buyable pullback. But I know it's going to pull back. This is what you do when you break a chart down. Okay, and one last chart, guys. All right. So, we have a stock dropping, goes sideways, 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 back to the moving average. Look at how narrow. Look at the volume. Look at the volume drop down there. Guys, look at the multiple time frames. Look at the higher time frame. This is a 60-minute. This is like a 2 or a 5-minute, okay? This is a 60-minute at the bottom, okay? I'll put this out there for you people that really care. Okay? Let's not do that. Let's do this. All right? So now, the higher time frame is below support. 54.50 is the support. Timber, look at the void. Go back up top. Consolidate, tight, 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 tight. When it breaks the threshold of the 60, breaks the threshold of the 2 or the 5, You want to see commitment when it breaks it. What do you get? Oh my goodness. That's over 1 million shares. 1 million shares on a 2 or a 5 minute chart. 1 million shares in a 2 to 5 minute period. Why? Because you're matching the time frames. Multiple time frame analysis. I like that to be red. It should be red. Okay? That is great trading. This is what committed volume looks like. Okay? Stock goes lower, bounces, goes lower. That's great trading. Okay. Now, volume summary. Remember, price has to confirm everything. You can't just have volume. In a vacuum, so what? There has to be a pattern. There has to be multiple concepts converging in an area. Okay? There has to be. Okay? We never trade in a vacuum. Okay? Multiple concepts converging in an area is what we're after. Be patient and disciplined enough to wait for your pitch. There will always be another trade. There is always another trade. It's out there. Demand quality. Demand it. Don't ask for it. Demand it. There's 4,000 stocks out there. You don't have to trade this one if it's not giving you what you want. Okay? You don't have to trade this one if it's not giving you what you want. Okay? But remember, price has to confirm everything. Now, keep it simple. Volume is a very important part of trading success. However, we still need to keep it simple. 3 main points I want you guys to consider. Void, relative strength and weakness, clean patterns. That means multiple concepts converging, volume, bottoming tail, support, void, relative strength, weakness, moving averages, trending, etc., and so forth. Be patient and disciplined enough to wait for your pitch. There's always another trade. Okay? Stop being that jitterbug. Stop being that person that's all over the place. Pick your 5 or 10 stocks and just wait for them to give you something. I promise you, if you have 10 stocks on your list, I promise you at some point during the day, 1 or more of those stocks will give you an opportunity. More likely, 5 or 10 opportunities. It's just a matter of how well you can see and read the chart. Okay? It's just a matter of how well you can see and read the chart. So, I hope that you guys enjoyed this lecture on volume and using multiple concepts to help define the future. We never know the future. But when we have these multiple concepts converging, it increases the odds of the future being what you expect it to be. And volume is a huge part of that. It's one of the biggest parts of that. Because volume, like we said earlier, is commitment or lack thereof. We want institutional money. We want big money. Remember, you're the little shrimp, the little remora on the shark or the whale. You're not the whale. You're not the shark. You're riding their coattails. And if you think otherwise, you're going to get yourself in trouble. And trust me, you don't want to be in a stock that you can personally move. Your 10,000 or 20,000 shares should be absorbed into that stock without even knowing about it. Okay? Those are the things that you need to think about. All right? So I hope that you guys will use this lecture to be better, more patient, more disciplined, and more profitable traders. I'm Jared Wesley of Live Traders. We'll get back at it again next week.